see why I had to go all the way to Durham to find him and get this appointment. Fantastic. Really enjoyed listening to the personal story, the philosophy, the experience, the way you moved seemingly easily from point to point, and you started off by telling us you used to hide behind your mum's skirt. What a story. So, I would like to take it to Q&A. I'll take some from Twitter. I'll also take them from anyone in the audience. I think there's such a big body of content to interrogate Jeremy on. Has anyone got the first question? Will you quickly introduce yourself and limit yourself to one question so we can go through as many as possible?
Thank you for the opportunity. Thank you, Jeremy, for the inspiring presentation. My name is Blessed Bernard Wonderful Wesonga. My question is,
Blessed.
when you're looking at the curve along Africa from the arrogant, the African rising narrative, towards the end there was the fragility among the democracies, and that of course plays in the political sphere, which also affects business. And I also understand you are a leader in the private sector, so I would just love to understand maybe some of the strategies or decisions that you're making in the private sector to affect that, whether you have control over that or is just something that will run and then whatever it leads us to, because I would love to understand about that. Thank you.
Good question. Blessed, good to see you again. We go over the parity, right? Okay.
Thank you. My name is Aziza. Thank you for the presentation. I just wanted to hear a bit more about the regulation you spoke about. I mean, traditionally, banking industry has been known to be conservative and highly bureaucratic. So how much would you attribute that to regulation, maybe from regulatory bodies, and institutional culture? Because you mentioned like Fintech has managed to push through those barriers and provide services. And then relatedly, how would you analyze the threat of terrorism towards the banking sector and how business is operating? Thank you.
Are you wearing a skirt? I'm joking.
Good morning, everyone.
Morning.
Thank you for your wonderful presentation. My name is Nancy Marangu. My question is, what are the factors that can positively or negatively affect the advancement of green investments in the banking industry in Kenya?
Great.
Thank you.
Thank you.
So Blessed, your question around really the fragility of the African economies and just also what we can do as private sector. I think there's a couple of points. One is that everybody was so excited about this emerging middle class, that is there, and what it means for consumer goods companies, service companies, and the predicted growth of, income, which would be the ones to consume those goods. And I think it's definitely grown, but the question is, has it grown to expectation? And now in a world which is increasingly regulated and increasingly and when I say regulated, I'm not talking about banks, I'm talking about in general. So if you think about things like the consequences if you're caught as a multinational in a bribery scandal, whether you're in an OECD country, the fines that can be levied out on your business are massive, and obviously we see a lot of sentiment around corruption, poor governance, so it makes people very tentative. Those businesses who are not already in emerging markets, and in particular in Africa, question and say, look, we can invest in this continent, but if something goes wrong, we could pay for it at the group level. So they weigh that against other opportunities that they see in other parts of the world. Now, one of the bodies that I sit on is Kenya KEPSA, Kenya Private Sector Alliance. I'm a board director of that. And really what that body is trying to do is to see how can we make doing business easier, simpler. Because at the end of the day, we need to move away from aid and move to trade, and to business creation. Now, we have very, very tough conversations with government around what needs to be done. And you'll have seen recently a number of laws enacted, the Companies Act, Insolvency Act. There's a series of things that we do which should put in place the rail tracks which should make it easier to do business within the market. We would like to be able to see companies opening, you to be able to form a company in 24 hours, 48 hours. in a simplified process. So we're kind of balancing that between, the whole system that we've got of central government and counties, where on the one hand, we've got all these central government requirements, and then on the other hand, you've got counties also introducing their things. What does that mean for business? What does it mean for job creation? What does it mean for cost of running business? So we have a whole agenda which looks to lobby and canvass and talk to the government about what we require. And that covers everything from counterfeit products, trade policies, taxation. Yeah, and we've had a number of successes. For example, VAT refunds. If the government was not giving the proper refunds to companies, that could end up sinking those companies and making them bankrupt, impacting jobs. Yeah? If we end up with counterfeit products being brought into the market, how do bona fide, genuine Kenyan businesses making products actually sell those products if they're coming in at a fraction of the price? So there's a whole series of agendas. We, I think, as private sector and as leaders, must hold the government accountable. Yeah, on behalf of citizens, and drive that agenda. And we do so with His Excellency. We have, half-yearly sessions with him where they hold the cabinet secretaries and the ministries accountable. Is it perfect? No, but we're on that journey. And I think the biggest thing is to address governance issues. So, we'll continue to focus on that. I think in terms of, Aziza, your question on regulation, being conservative and how much of it is, in terms of impact in banking is to do with the regulators and regulation that has been put in place versus our DNA. I think it's both. I think you've got a situation because of the impact of financial crisis on people's lives and on government, the regulators, the pendulum swung to the other side. Yeah. Now the downside of that is obviously it impacts innovation and it impacts risk taking. Yeah. So you find banks are less likely, especially multinational banks or global banks, because of the consequences of an action in one market that can have in another. So to give you an example, if I have a problem with a transaction with the Fed in New York, and the Fed is one of my regulators, it is not a regulator for KCB or a regulator for another local bank. If I have a problem, they can suspend US dollar clearing for the entire group. Yeah, which means any dollar check cannot be then processed for the entire group if they're not happy with transactions we do here. So that puts now a new standard in terms of Department of Justice and some of these other regulators. But I think coming to the DNA of banks, I was saying this to Ali Khan earlier, banks typically don't want to lose money. They want to lend money, but they don't want to lose money. Yeah. So by our very DNA, I think we are fairly conservative, but that has to change. And I believe it will change. We will use technology, we'll use new thinking to be relevant, because if we don't change, then we will not have customers. Yeah, other people will provide those banking services. And you can see the way, the old days, people used to get dressed up, put on their best suit and go to the bank to ask for money. Now they want the banker to get dressed up in his best suit and come to you to sell you the product, isn't it? Yeah. So that just gives you an example of how now the world has changed. So if we don't change, we will be the dinosaurs and banks will disappear. So I think even though it might be in the DNA, we have to step out of our comfort zone while still protecting shareholder returns. I think in terms of the terrorism threat, we have a serious responsibility around terrorist financing, money laundering, prevention, and that's where systems work. You cannot do it manually. We've invested in those systems, and we need to really focus on this, because if we don't, we're going to tarnish the name of our countries. But more importantly, if we don't put in those controls and measures, the consequences of terrorism are so severe. Yeah, and we just need to look in the media to see what will happen, and it's all around funding. Yeah. If you starve those bodies of funding, it becomes very difficult for them to engage in their negative activity. So we do have a responsibility there, and we take that very seriously. Nancy, in terms of your question, which is a very broad question, positive and negative factors that are affecting credit, I mean, we could have a full-blown debate for a whole day around the positives and negatives. I think the biggest one that I would mention, just because of time, I think is the interest rate cap. I think everybody felt here bank rates were very high. But I think they were making general statements, because bank rates vary depending on your risk profile. But for the higher risk, there was the feeling, obviously, that they were high, and I believe they were high, but that was due to some core fundamental structural reasons for the banking sector. And we need to address those so that we can bring the cost of credit down while still protecting profits and returns for banks. So the consequence of the Interest Rate Act has been a massive slowing down of credit. So it's very real. You've moved from 20+% over the last few years to around 4%. I personally think if the rate law continues to be in place, we will move to a deceleration, i.e. we'll move from 4% into the negative territory, which means when people go for renewals of facilities and some businesses go for renewals of facilities, because they cannot give the returns, they will not take up, the banks will not renew those facilities. So all of a sudden, you can't get your working capital, and the banks will invest in other alternative investments. And if they cannot get a return, say on government securities, they will just not take the deposits. Because you take deposits to on-lend to make money. If you don't have the lending available, why would you take the deposits? So we haven't got to that space yet, and I think there's a debate around what should happen with the interest rate law, because the consequences have been assessed that it could be as much as 200 basis points off GDP growth if the law continues to be in place. That is quite severe. We've already seen a reduction in the GDP forecasts. So if you now take another 200 basis points off that, we could be in the 3.5% territory. Now, that now puts us in a very average growth rate and will not address the issues of future economic growth and poverty alleviation. So I will just talk about that for this point.
Excellent. Nancy also was asking about the green economy, green bonds. I don't know if you wanted to touch on that as well.
Yeah, I mean, I think those, obviously that remains an opportunity as we go forward. And we've seen the KBA has been really working with the government and other stakeholders that are trying to drive those green bonds. And I think, we've seen that in the media going forward. I think that remains an opportunity, whether it's solar-backed or hydroelectric, geothermal. I think there are a lot of opportunities for that. And I think if we can do that, we can actually become global best practice, because we're blessed to have a lot of these core fundamentals in place here. So I see a lot of opportunity for that going forward.
That thing about Jeremy being regulated by the Fed is a huge difference compared to being a local bank. And then the risk that you're representing to the Barclays PLC is fundamentally different, isn't it?
Thank you. Jeremy. Rakesh Gadani. We've met on multiple occasions. So recently I went to a Barclays Bank branch, and I'd love to know, do all your management, you and your senior management, actually your entire management group, do you actually use each and every one of your products? And if you do you think it's the best out there? I'll just cut straight. I used your cash ATM. Great thing, very nice, very easy to use. But it was interesting, it didn't allow me to add any details to it. So now I have this little receipt and I'm scratching my head. What did I do this exactly for? I mean, I may put something in there. So and I'm not just Barclays, but I think across the Kenyan corporate landscape, when you meet your fellow corporate heads, please have them use your own products, eat your own cooking. Thank you.
Thank you. I'll come here on the next round.
Hello, morning. My name is Amos, and thank you for the good presentation. My question will be more on a global basis. Recently, we heard of the easing of Dodd-Frank Act, and the reintroduction of the Glass-Steagall Act. For your case at Barclays, it's only recently that you entered into the brokerage business. Going forward, what do you see as the likely impact on your business?
Of this changing regulatory environment at the high level? Yeah. Shall we take your question? Yeah.
Hello, thank you, Jeremy, for the presentation. My name is Wellington. Just wanted to ask about, for Kenyans, I know for some time back there's been some issue about transparency in the banking sector, especially when it comes to your products, more specifically bank accounts and everything. I just want to know how is the banks responding to that, because that has been an issue for a lot of people. You go and sign up for an account, but you don't get the whole picture about fees and everything. And just also secondly, I would like to talk about you talked about fintechs company, taking advantage of the space the banks are left behind. So are banks actually open to partnering with these fintech companies, or is it more of just a matter of catching up and trying it on your own? Thank you.
So to respond, Rakesh, absolutely, we need to be eating our own cooking, as you put it. One of the things that I've said to in say our bank is, let's say take digital, yeah. When we were doing a test, how many people have actually used some of these digital products? Yeah, because we actually do those tests to be able to see. We run reports, because you can't sell things you don't use, yeah, properly if you don't understand them. So we've actually taken views that you must really demonstrate that you're using those functionalities. Yeah. So at its most simplest level, if you've got an ability to do a digital transaction versus an over-the-counter transaction, we will not allow you to do that over-the-counter transaction in our branch unless, especially if you've got that, just to really kickstart that. Now, when you talk about things like cash deposit ATMs and essentially you're saying there's no narrative. Yeah. Now, human beings evolve, so you move from not having the functionality to having the functionality to wanting more functionality. So it's not, we're not in a space where we don't understand what it is we need to do. So please don't misunderstand me that we don't understand you as a customer. But behind something as simple as a narrative requires a lot of system development, a lot of code to be written, a lot of integration into the system. So you've got a choice. Do I wait until I get the all perfect, all singing product, or do I bring in this product so you can start getting the utility of the product? We're very aware that we want to be able to put your narrative. I think that change is either in place or going to be in place shortly, so you can actually have a third party deposit. Because when we brought it in, having the third party required a lot more development, but people wanted to be able to pay and say, I want to take this cash and be able to pay somebody else. But then you are like, so who paid me? I don't remember who paid me. Yeah. So we've built in that functionality where you can put in and say, Jeremy paid you on this date for X, so that when you get your narrative, you can be able to see that. Yeah. And as we move, even things like we didn't have, say, credit card functionality payments through the ATM, now we're adding those. So I think it's an evolution, and absolutely one of the things I do personally is I want to use each and every of those products, because otherwise I will have no understanding of how easy or difficult they are. And quite more often than not, my frustration is they're still not simple enough. They're still not intuitive enough for customers to use. The challenge we have is how do you build and fix those in a way when you have multiple competing demands for your resources. Yeah. So we have more products and services that we want to launch than we have time or money. Yeah, which is an interesting. So we have hundreds of ideas. The question is, which ones are going to give you the biggest delta from a customer experience perspective and a return perspective? And that often means some things get left off. So it's not that we don't know that those things need to be fixed, but there are challenges around how much you can actually implement at one time. I think, Amos, your question around the changing business environment and what it does for us here, I mean, regulations are very real, consequences are very real in terms of fines, licenses, etc. I just shared the one example, which is I'm regulated by multiple regulators. So I'm regulated by the CBK, I'm regulated by the insurance regulator, I'm regulated by the Retirements and Benefits Authority, I'm regulated by the Federal Reserve, I'm regulated by the SAB, I'm regulated by Department of Justice, PRA, yeah, IRA, yeah. So not all the competitors are regulated, and we have to take the highest standard of those.
Man, you're regulated.
Yeah, so we have to take the highest standard of whichever they are. Yeah, so you can imagine that puts a different onus on us. So I actually think, we need a situation whereby we have the highest standards of governance to build confidence to continue to get people to invest in this country. We talked about FDI. People want to be sure that the governance frameworks are aligned to their markets, because they have to explain to their boards what are they doing in these markets. That's why even things like the legal process, the justice system, if those are not working, why will people come here? So the same thing for regulation. We really need to make sure that we up the ante on that, and it is very real for the way we operate. Now, Wellington, in terms of your point on transparency, absolutely. I think one of the things we do as Barclays is we focus on sort of treating customers fairly, and how do we use systems to make sure that you're aware of the product you're buying, you know how much it costs, that you get those regular updates, you understand the features. And I think we can only expect regulations to go tougher on that. That's why we're seeing the Competition Authority doing audits, doing raids. So I personally think if organizations don't adjust to this proactively, we should not be doing it because of regulation. We should be doing it because it's the right thing to do for customers. Yeah, so you have willing buyer, willing seller, and they understand what they're getting. I think that becomes a competitive framework for the future. Not trying to mislead and get you to buy the product until it's too late for you to reverse out, because that customer is not going to have a good feeling about your product and your brand. So I actually think that's going to be important. And in terms of your second question with fintechs around partnering, I think that's inevitable. You're going to have fintechs that will go on their own, but also they're going to need investments. And banks will have a choice: either try and innovate them, which is one option. They'll set up their own labs and build their own products. But at some point, even you find innovative companies buying out other innovative companies. Yeah, so it's inevitable, I think, that even banks will start buying out fintech companies. They will also use that as a means of piggybacking on those benefits and the ability of those companies to come up with new creative ideas. So the question is when you take over a company like that, the easy thing would be you take it over and then you make it like the bank. Yeah, you don't want to take what has been core to making that fintech company successful and change it. You almost need to acquire it and allow it to do what it needs to do to change you. And that is a challenge around acquisition. But I expect to see more partnerships going forward in that arena.
Can I just insert one from Jimmy Bogonko, who's asking, can Jeremy expound on what the PLC pullout means for the Barclays brand in sub-Saharan Africa? It has a heritage. Will it all be lost? Can we take two questions? Yes, one there.
Thank you, Jeremy, for your presentation. I really enjoyed it. My question is on mobile banking. Barclays, you've said a lot about change in the banking sector, and Kenya has been at the frontier of mobile money and mobile banking, and we've seen many banks coming up with innovations for like ACB M-Pesa, Equitel, CBA Loop, but we haven't heard much from Barclays. So my question is, will we be expecting, or why aren't we seeing much from your end?
Great.
Thank you.
Yes, thank you. My name is James. My question is on blockchain technology, whereby would you, from where you sit, would you highlight the merits and the demerits of it, especially considering that the currency itself, the behavior goes against mainstream economics? And second, what would be the future of human resource in the financial services industry, especially considering that there's digitization? Should we just shelve our accounting degrees and just go get computer science?
It's a robotic future, isn't it, according to that one?
Yeah, I think to Jimmy's question around PLC and its divestiture and what the implications are. Essentially what PLC was saying, it was going to reduce its shareholding from 62.5% to a point where it is achieving accounting and regulatory deconsolidation. And what Jess Staley, as PLC CEO, working with the regulators, and Maria Ramos, as Barclays Africa CEO, have said is that number probably looks in the region of, excuse me, about 20% or thereabouts. Yeah, so we're not talking about a complete sale and exit. They wish to retain a stake in the business. Along the way, obviously, they're going to consider who is interested and what price they get from the different parties. So all options are open, from a book build where different people buy the stake that they have to offer, to obviously single players coming in and taking significant chunks. That process is underway. So depending on what outcomes that has, obviously the future of the brand, how it will look like, will get impacted. So it is possible, let's say there's a book build that ends up being finalized. From a regulatory perspective, the concern at the UK regulator level is there regulatory and financial risk of continued use of the brand across Africa when you don't have a material or controlling shareholding stake. So, but what I would say is, so even if let's say that the decision is made and we rebrand to another brand, what I would say is, it is the businesses that have survived for a century. Those businesses are run and are on a standalone basis able to continue to run. So if we look at Barclays Bank of Kenya, we are not reliant on the group. Yeah, we have got our own capital base here. We have our own people here. We are very liquid. We've got our own customers. We're profitable, and we've got a strong parent shareholder in Barclays Africa who will continue to invest in our business. So yes, it will create some challenges because people are emotionally tied to the brand, and have been, because they've used the services for a while. But I think at the core is whether the bank can still offer you the services that you actually want. And remember, we've been here 100 years, so we'll manage that as and when, if that happens. In terms of the question on mobile banking, Absolutely. I mean, we're not, to Rakesh's question before, we're not sitting idle, not understanding what needs to be done on the mobile banking side. But like I mentioned before, it's a bit like trying to build a skyscraper, off a small house. You need to do certain things from a foundation perspective. So we needed to invest in the core infrastructure that would allow us to plug and play middleware and other things which would allow us to do mobile banking. So we've made significant investments in the functionality of our existing mobile banking. We recognize there's more to do, but I think you're talking more about the lending product that is out there by some of the competitors. What I can say, we're at advanced stages of multiple mobile banking products that will address those needs. So if you watch this space, it won't just be about that, but we also want to do things that are a first in this market that have not been done. Because I think if you're not a relevant player in the mobile internet banking space, I think you will get sidelined entirely, because the customer experience will not be what they want. So you can just watch this space. In terms of blockchain technology, another subject one can debate. I think people sort of equate blockchain with Bitcoin and the sensitivities around that and what it means, and it comes back to transparency around who's moving what money where and how do we regulate it, and regulators don't feel they have control over it, so they're not so much for it. But in this world, I think that's going to be the challenge for regulators, is how do you regulate things which are international in nature, and how do you regulate things like Bitcoin going forward. I think blockchain will have a material impact. We as a bank have actually invested in a number of startups that are doing work on blockchain, and have actually done some transactions, trade transactions, which are backed by blockchain. We actually run a competition here in Kenya around who can come up with the best blockchain ideas that can impact banking. So we're excited around what blockchain offers. But how it emerges over time is yet to be really seen, but we wouldn't want to be left behind by not playing in this space. So I think it's definitely an area of opportunity that is even well beyond banking. I think the opportunities for example, making sure that transactions are genuine, documents are genuine as part of transactions, is a huge opportunity that we have going forward.
Hi.
Hi.
Thanks, Jeremy, for your presentation. My name is Ben Gashie. I'm a bank assurance officer. As Jeremy has said that bank assurance is doing very well. My question is, because sometimes a client is paying premiums that are very high. So we end up financing the client so that he can pay those premiums. So why don't we launch our own insurance premium financing? Because we normally depend on other banks like KCB, Commercial Bank of Africa, and I&M. So I was asking if we can have our own insurance premium financing. This will be easier. It will be even a profit to the bank. Thank you.
Thank you.
Hi, I'm a financial blogger, and I did an article on financial inclusion, which led me to prompt this question to the CEO, Jeremy. What is Barclays Bank doing in contributing towards financial inclusion, particularly in Kenya? What role are they playing in achieving that SDG, particularly, and ending poverty in Kenya? So that is my question.
Now, I was analysing the share price of Barclays, and I've been following it closely. And of course, Jeremy is paying a double-digit dividend, which no one has sort of mentioned at all.
Thank you so much. I'm Smith, just right from business school. So my question to Jeremy is that, from your analysis, what are the perceived positive or negative impacts of Brexit in the banking industry around Africa, and especially in East Africa?
Yeah, I mean, I think premium financing represents an opportunity for us that we still will explore. There's certain risks associated with it as well. But yes, the answer is yes, we're looking into it. I think the first thing we wanted to do was, number one, launch the bank assurance business, build capability not only to sell the product, but also to make sure that we'll fulfill the full cycle, which is that if there are claims, that those claims get processed effectively so that the customers have confidence. So absolutely, it's something which we will look at, and you're quite right, represents an opportunity for us as Barclays. So again, watch this space. In terms of the question around financial inclusion and the SDG goal on that side. I think different players have to figure out how they can contribute towards financial inclusion. And a core part of financial inclusion is actually financial literacy. Yeah, because it's difficult to have financial inclusion without financial literacy. So what you heard our Ready to Work program, which really was focusing on financial literacy, yeah, for young people, because young people are the future. If they're financially literate, they can make better financial decisions and they can mitigate risks in a better way that gives them a better chance to be successful in the future. So if you take, linking to the bank assurance question, if you take the cost that it would take to mitigate, say, medical insurance and medical risks. And we know that when somebody experiences a medical situation within their family, that can typically financially cripple a family for years. So if they are financially aware that they can actually mitigate that risk for much less money, you've given them a better situation in terms of their ability to achieve their goals. So we have used Ready to Work. Other banks have used different means to to drive their agenda. You've seen 94,000 already. We want to get another 400,000 up this year, and it will continue going forward around people being much more financially literate. In terms of products and services, I think as we become more digital, it becomes much easier to deliver financial services to every corner of this country. In the past, opening branches was just too expensive as a financial obligation to be able to do that. So as we continue to invest in mobile internet banking, we're going to see more of those products. You'll have seen recently that we were the first international bank to go into agency banking, and that becomes another avenue where we can take banking services through partnerships and agencies out there. So we've got a partnership with Poster today, which has given us another 400 outlets, but that's really only the beginning. We're doing a lot of work with other partners that we have with our credit card business, our point of sale machines, and we would expect that number to move into the 5,000 plus level in a very short period of time. That way we take banking to more people, because if people say the branch is too far, now we can say there's an agent near you, and then we become more relevant from a bank account perspective. I think the last question again is very broad, the positive and negative effects of Brexit. We're still to see how that is going to evolve over time. I mean, I think Brexit kind of caught everybody by surprise. I think people really were not expecting the vote to go the way it did. And now there's all those debates every day. Now we've even seen a snap election being called so that we can see which way is the way forward. But it comes back to the point around nationalism, yeah. And I think all of a sudden, all these moves, including the moves by Trump in there saying we must protect America and American jobs, we have to be cautious to say what happens if some of the trade treaties are torn up, yeah. What happens if they say we don't want to go anymore? Yeah, what are the implications on businesses here today that have been over time using those trade treaties? So I think from a trade perspective, it could have a significant impact, but it's early days to tell what exactly that will be, because it depends on the way that those things those treaties and arrangements are negotiated. And I think it's going to be a multi-year negotiation exercise. The question is, will they be able to have their cake and eat it? The pieces that they want, and then leave the pieces that they don't want. Because on the flip side, the European Union will also say, you can't be a fair weather friend and get your cake and eat it. So I think let's see, but I think the risks are real. So I think as a country, it's going to be increasingly important to diversify out our export base, diversify out our revenue streams so that we're not exposed, and to actually build new revenue streams that can actually replace those if they do come in, and open up new markets for our Kenyan businesses. And I think things like, for example, the direct flights to the US, things like that, we have to think about them strategically. Where are the trade corridors? Who can we trade with to create new opportunities going forward? So I think we need to be agile and dynamic and responsive to this, and even our diplomatic approaches are going to have to really be in focus to make sure that we don't lose out.
I would like to thank the agile, dynamic and responsive Jeremy Awori of Barclays, Kenya. From what I learned there, I'm certainly a buyer of the shares, Jeremy. I think we've got somebody at the helm who's really thinking about a bunch of stuff. When I was thinking about what to talk about, I remember the day when the Barclays PLC announcement came out, and there was a similar day for me. I was working at Dresdner Bank, and Deutsche Bank announced that they were going to take over Dresdner Bank. And I went down the lift and I came out onto the Thames where I used to walk around, and there were all these guys with Deutsche Bank t-shirts on, and they turned their back to us, and as we were coming out of our door it said, "We're going to eat you for lunch." And it was on the news, and my wife says to me, "They're coming to eat you for lunch." And I said, "No, don't worry." But it was a similar time of when you're uncertain and you've got to take charge. And I think what I'm hearing from Jeremy is a bank that's taken charge, a bank that's building on 100-year longevity, and a bank that's got somebody at the front who's thinking and innovating as he does all those things. And I must commend you for what was a wonderful presentation today. Deeply grateful. Asante sana. Can I just introduce you all to one quick friend of mine here? Moses, please stand up. When I first came back to Kenya, Moses had kept in touch with me. He was at Barclays in London, Barclays in New York. There are a lot of people out there who want to be traders and things like that. Moses is a good place to start with. Thank you, Moses.